Hello traders, Mark Chapman here. I'm the creator of the trademarked Trap Traders concept. Welcome to today's Trap Traders Trade of the Day analysis. Today's date is the 23rd of June 2016. A slightly different daily video today as it's Brexit, and in case you haven't heard, that is the vote for the UK to potentially leave the EU. Now if this was to happen, the pound would drop like a stone and the stock markets would also do badly. So that's going to massively affect commodity currencies like your Australian dollar and your New Zealand dollar and your Canadian dollar, but obviously it's going to have a huge impact on sterling. So the trade that you might be interested in looking at under those conditions are the ones I've just described, and in particular what's going to benefit in terms of a Brexit would be safe haven currencies. So the pound Swiss, the pound yen make sense as standout currencies to look for opportunities to trade. The last poll I believe is late tonight, about 10 o'clock tonight, and if the Leave campaign have an edge in terms of coming out of the EU, you could be in store for some big moves at that moment. And then as obviously the vote develops, I believe 7 AM British summertime on Friday morning is when the official vote will be announced, but I think it's fair to say that we will have some understanding of that well before that point. So a lot of people are obviously quite fearful of events like this, and a lot of retail traders, especially technical traders, will choose to stay out of the market under those conditions. What I would say to you is don't be fearful, just play it in a different way. So for example, if you're usually using 0.5% or 1% risk per trade, I encourage you to use a lot less than that, right? So 0.1%, 0.2%, I encourage you only risk that on a normal day. But if for whatever reason you are risking those higher percentages, just really drop down your position size. And if you notice the price dropping and you have on good information that the Leave campaign are leading, and you see a move that resembles something like this, it's obviously going to be a lot bigger than this, but don't worry that the market has dropped so far and that you may be thinking that you've missed the move. You will not have missed the move. This has the potential to drop sterling 1,000, 1,500 pips in very short order. So just drop your size, take the trade, and then obviously you can place your stops on the other sides of these structures. Obviously you're gonna have to give it a bit of room, so don't worry too much about that. Risk percentages are what it's all about, okay? Don't worry too much about reward to risk ratios under this condition, because you might have to give it a big stop initially. Don't panic about that because you've dropped the position size. It's no big deal. This is obviously a one-off event that doesn't come around very often, and you want to try and get involved in it if you can, and then you can build into a position if that makes sense for you. But also be aware that whenever you do that, you do run some risks of getting top heavy if you're not simultaneously adjusting your stop loss. So make sure you do that. Never get top heavy. Don't allow this to end badly for you. Or of course you've always got the alternative to sit on the sidelines and do nothing, and then just let the dust settle and see what the result will be. But it's just a way that you can trade an event like this. Leaving would certainly be a massive shock, and the sterling and the stock markets are going to suffer as a result of that. So it's an opportunity for those who want to get involved. Don't be fearful of it, as I say. Just drop your position size, give yourself plenty of room with big enough stops, and then if you want to, you can always build into the position going forward. If you'd like to join me in my trade room today to get more analysis on Brexit and the traps we'll be trading in the coming days and weeks, then click the button below to join me for today's live trade room. Have a great day guys, take care, and I'll see you there.